people reaching out to us and asking us questions and leaving us comments saying they really enjoy having three separate points of view, and actually some other people. We had JD on last week, and man, if y'all missed it, go back and watch that video. It's like 45 minutes long, but it's probably some of the most nuggets of knowledge you can get out of 45 minutes if you've got 45 minutes, just while you're laying down before you go to sleep at night. Kiss your dog and then go watch some YouTube. And if you haven't already, like, comment, subscribe, whatever you got to do to make our algorithm grow up so it sees more agents, more people can see this content, so we can help more and more agents each and every day. So we love the feedback. Please, if you haven't already, we're shooting for 100 subscribers before the end of the month. Make it happen. We're at 94. We need 100. Can you please help us do that? So today,
we giving something away when we hit 100?
Do what?
We going to give something away when we hit 100 subscribers?
What do you want to give away? Your
Bring
choice.
a random subscriber on for 10 minutes on the show.
Yeah, bring them on. Let them ask any questions they want.
Mm-hmm.
Sure.
We can make something better. I don't know.
Yeah, no. If that seems good to the watchers, think if it's a good idea, we'll bring you on for 5 or 10 minutes. You've got to be subscribed. You've got to like this, and you've got to comment down below, "I want in," and you'll be one of the lucky chosen people. So comment, like, subscribe, and you got a chance to win. So today's topic actually kind of spins off what we spoke about the other day when we were talking about carrier lineups, because Nick said something very valuable about just pick a carrier and go for it, right? And so then comes the topic, well, what if I don't pick the one that's the least expensive, or what if I pick the most expensive one? And so we thought it would be a good idea to talk about this and say, does price really matter? So that today's topic is, does price really matter in the field? How much does price matter? And so let's just go right into it. Nick, I just want you to start. Tell me your thoughts on, does price really matter?
Okay, I'll take the yes side of this, with the caveat of sort of is kind of the answer.
Sure.
Yeah, price matters. You do not want to be selling policies that are the same price as that insurance company who's named after an American president. Those policies are extraordinarily expensive. They're very easy to replace, and again, we're coming from the perspective of this is talking about final expense. If you're talking about term, if you're talking about large-scale financial planning, using indexed universal life policies, it's a little bit of a different story, because then there are features to products that actually may make one product a little bit different from another. But at the end of the day, final expense is pretty simple. When you die, the policy pays. There's not a lot of difference company to company.
Sure.
Whether or not you get additional benefits. A couple of little things, you got accident protection with some companies, you've got fraternal benefits with some companies have a better history of paying contestable claims. They're not exactly the same, but from a consumer point of view, final expense, when you die, the policy pays, as long as it's in force. So, to a certain extent, yeah, price matters. I was talking to somebody on Facebook the other day, a public chat, you can probably go find it if you look hard enough, where somebody asked for quotes on, I want to say, a 82-year-old for like $10,000 who was in really good health. And the prices ranged from like $80 a month with a really, really good company to like $125 a month with probably the largest insurance company in North America. A little bit more with that company named after the American president, et cetera, et cetera. That's a large difference in price. So in an instance like that, if you have policies that are available to you and you can sell an $80 policy or you can sell a $125 policy, and all other things are equal, it's level benefit, whole life, final expense, simplified issue, client qualifies for both of them, and you're contracted with all of them, you should sell the less expensive policy. For a lot of reasons, but I will let Chris throw in some rebuttals.
Sure.
Because I think he's sort of taken the opposite side of this. It's not really a black or white issue, there's not like, but if we're going to frame this as a debate, that's the side of the debate that I'm taking.
Okay, sure.
I would say price matters under certain contingencies. A couple points that I made, and I won't try to throw them all out at once, is the company I'm using going to offer Social Security billing, or is the other company shot in the dark billing? For example, there's a rate busting company out there that's great for people that have no medical problems, but if the person is hit or miss on collecting the money, maybe I might pick a premium that's $5 more a month because I'm more confident it's going to be collected. Other points to keep in mind, which is easier to get the business issued? Am I going to pick the lowest rate? They're going to pick an outbound phone call to the client. They're going to be more stringent in their underwriting, and I may not even get the business issued. So the lower rate didn't matter at all. And if I'm a newer agent and cash flow is important to me to pay next week's lead bill and my mortgage and the lights and whatever, which is going to pay me quicker? I'm more comfortable picking something that's a few dollars more expensive if that means I know the agent can afford their leads on Friday versus a carrier that may not pay until the following month. So price does matter, but on a whole, I'll say if it's within $5 to $7, maybe $10, then pick the company you're comfortable with that's going to issue the business. And that's how I would frame the argument.
Yeah. Guys, make sure before I start talking, do I have any reverb on my mic still?
You're good right now.
Okay. Yeah, I tried to mute it while you were talking. Again, this is not a black or white issue. This is just a personal preference. And I kind of side with Chris on this one. I don't think it matters too much. I mean, most companies are pretty competitive in the market space. You're talking within a few dollars. And the thing is the final expense client is really, once they get their policy and they have it in hand, they're not going to go through the trouble of reapplying for a new one for $3 or $3 cheaper. And they're not going to do it to save $36 a year. You know what I mean?
So that's true. That's right. True. They will not do it to save $36 a year. They won't do it for $3 cheaper. But they would do it for me because I'm not going to sell them $3 cheaper. I'm going to sell them an extra $2,000 of life insurance and cash back.
Right.
And it may be actually even more, but they're going to get the more coverage. And so some of it matter. I mean, so it matters. It's not the first thing that you should care about, though.
Right.
And it matters more when you're setting up that initial carrier lineup. You want to have companies that are competitive coming out of your bag first. But it's not the only thing you should be considering. Like we talked about the last time, you should have a company who you trust for billing. There are companies that are very competitively priced who I don't trust for billing. They don't tend to get the first draft correct. And because they don't get that first draft correct, you end up with a ton of issues. Drafting your first premium a week late is no good for a lot of final expense clients.
I think it's safe to say, because certain folks do watch, that companies with some of the biggest branding and name recognition have this problem.
Yeah.
And if they would master one little thing, they would master the market. And I think there's a major disconnect, as a message to the carriers between what you notice in your home office and what actually happens in the street. And we're willing to sell a more expensive product if we know it's going to get issued, and not choose you if we don't have confidence in you.
Oh yeah. I mean, there's times when I will intentionally choose a product that is a little bit more expensive for just that reason and suggest that product to a client, because honestly, a policy that's not in force when you die is not going to pay. Everything is presupposed on the idea that the policy is going to get paid on time and it's going to stay in force. And if that policy doesn't stay in force, it doesn't do anybody any good.
Absolutely.
So, I mean, yeah, so price matters, but it's not the most important factor.
Real quick, I want to hear y'all's thoughts on this. I know this might be a sidebar question, but what do you guys think about automatic premium loan? APL.
I had a client, my very first client, actually, that I ever wrote her with a company that's big in health insurance, Aetna, signed under American Continental. And boy, that was a company easy to work with in the very beginning. And she ended up going into a nursing home. And then eventually the automatic premium loan was paying the premium because she was no longer getting any money. And the automatic premium loan protected the policy until I found the beneficiary to make a few more premium payments until the lady died so the claim could pay. So I think that's an important feature. And if you design a final expense product without it, you have no concept of the product you're actually selling.
No, I agree. I think it's a good idea to have an automatic premium loan. I always include it with the policies that I write. For just the reason that Chris just said, if they've had the policy for a couple of years, it's built up a little bit of cash value, and they run into an issue, something doesn't bill right, they've got that time. It's another reason that I choose some of the companies that I work with. Is some companies are willing to bill clients in arrears to allow them to kind of catch up slowly. Other companies aren't. And so if a client misses a payment and they can't do a double payment the next month, then they're in trouble. And then you have to potentially start them over on a brand new policy. So, I mean, we're kind of coming back around to like what makes for a good carrier, less than the original topic. But, there's a lot of little things. There's a lot of little things that go into it, though.
Yeah, that was just a side question I had for you guys. I wanted to hear y'all's thoughts on that before we kind of delve more into the topic of does price really matter? I mean, Nick, you brought up the point that they won't do it for $3, but they'll do it for $3 because you're going to get them $2,000 more coverage, and you said cash back, right? So you're replacing a lot of policies.
I do replace policies. Yes.
Sure. Do you find that people replace it just because they have some cash in there?
Sometimes.
They just, and even if it's $200, I mean, they see $200 and they're like, oh, yep, I need to get that real quick. I'm gonna go ahead and get a new policy and move on down the road.
I mean, sometimes, yeah. But I mean, it's not usually just $200. I don't usually talk about replacing a policy for the idea of them being able to get $200 in cash back. That's not something I usually bring up. But I did a policy for a couple where they'd actually given me a think about it back in October. And they called me back last week and said, hey, you'd mentioned that we have all this cash value in our policy, and we kind of are thinking that we need to get access to some of that. Could you come and talk to us about that? We've got some bills that are sort of crushing us. Can you come back out and talk to us about how that would work again? And they had two $12,000 policies. And they had $5,000 in cash each in those $12,000 policies. And they were saying, we were really thinking about taking a loan out against these policies. And I said, well, listen, you've had these policies for a long time. I can't get you a $12,000 policy for what you're paying. But let's call the company and let's see how much it would cost you in interest every year to get a loan if you were going to keep up with the interest, and see how much they'll actually loan to you. And it turned out that if they took a loan and they never paid it back and they just paid off the interest and kept up with their regular premium payments, which is the only thing they'd be able to afford, it would have added about $30 a month to their monthly budget. And they would have had a $8,000 policy each. And for what they were paying currently, without adding that $30 a month to their budget, they were able to get a $10,000 policy and get the entire $10,000 that they had in cash between their two policies back to them. So I suggested that they might want to go in that direction, because $10,000 of tax-free money to help pay off some of the medical debt that was accruing on them was valuable to them at that point. And even though they lost about $2,000 of coverage, if they had taken out the loan, they have more coverage than they would have taken out against the loan, and then they wouldn't have to pay the interest rates to keep the loan from growing.
Sure.
So, I mean, that's sort of the type of thing that I think about if I see somebody with a large amount of cash value. It's not always the right choice, and it's not something I ever push. It's just something that I kind of point out and will suggest if they're in a situation where they're looking to do something like that, where they're looking to take the loan out against the policy.
Sure.
And,
let me ask you this. What about, some people add and they forget about the little $1 or $2 here it costs for a child rider or an ADL or an ADD. Chris, do you have a point on that?
Yeah, I think sometimes 2 points. Some of the best movable middle replacements you can run into are people that have borrowed against their policy, have significant loans, often don't know it, and the face amount is far less than what they actually have. They're never going to pay back the loan. They can't afford to. They're not even making interest payments. And you can propose a scenario where you start them fresh. I like to say forgive the loan, and they no longer have a problem. So when you're doing a discovery phase, when you're reviewing the policy, when you're seeing if there's any way you can better their situation, don't be afraid to ask or check on loans, because some of the best replacements I've ever made were based off of huge loans the policy has had and not just price versus price. When it comes to price versus value, sometimes, and kind of in the realm of replacements again, you can't replace a policy because the value exceeded what you have to show them, or you can replace the policy because it has more value than the one with a lower price. So say, for example, the dirt lowest rate policy has absolutely nothing but $10,000 death benefit. And that $10,000 death benefit is $55 a month. So I sit in front of the client and I say, well, you've got a really great whole life policy, but this one here is $10,000 for $62 a month. It pays double if you die in an accident, pays triple if you die on a common carrier, and it includes X. So do you feel like these additional benefits are more important to you than saving a few dollars? And sometimes the client will say, well, yeah, I'm afraid of dying on the bus or murder or what have you, and they see more value and will pay more value. So price does matter, but sometimes value matters more than price.
Yeah, you have to be selling value in the house, or you're really not selling it. Because if you go, I learned this, if you go to your client and say, I'm going to get you the absolute cheapest possible because that's what you need to do, you're automatically teaching your client for the next insurance agent to come by that has something cheaper for them to go with that, and it automatically replace your policy. You're training your client to do that immediately if you don't learn how to build value with those riders that you explained. You get double if you die, you get more if you're on a bus or on a plane. Heck, you can get you've got extra money if you're on a cruise ship and you fall overboard and it's going to take money to get you back to the States. We have that as well. Those little tiny things could mean the difference of you selling a policy and them actually thinking, when someone else comes by. Because I guarantee you, if you're watching this video and you don't think that once to 5 times a month somebody comes by your client's house trying to sell a policy, you've already lost the game. You've got to learn how to build value in the house, and value is not price. Price doesn't matter that much. It does matter. You've got to be competitive in the market, but if you don't have value, you're really going to lose in this game in the long run.
One of the questions I love to ask clients when I'm going over the policy, and it was with an agent, How often does he check in with you? Did he speak to you last Christmas or call you on your birthday? Now, on all fairness, I didn't call every client on birthday or Christmas, but I challenge the value of the relationship when I'm trying to work my way into a replacement scenario. And if it's ethical, I'll propose it, but if it's not, we won't go there. But value sometimes comes with the fact that when the client needs their beneficiary changed, when they change banks, when the next agent comes in and says that what they have is not what you told them, that they trust to call you and to put them right. I almost tell my clients, I teach them stranger danger. Like the next person in the house is not going to be there to help you. And if you don't know them, you shouldn't show them your policy. Miss Johnson, your social is in this policy, your son's name, your bank account, things that I probably shouldn't even know about. So why would you show that to a stranger? And just building value in you because you're selling a competitive price, give or take a few dollars. You're selling yourself and the company. And like you said, Matt, somebody else is guaranteed to be there within the next 6 months to a year.
Sorry, I have to keep unmuting myself because I think there's some reverb whenever I'm talking or whenever someone else is talking. It's come through my phone because I don't have my headphones today. But yeah, you're guaranteed someone is going to come by and try to sell just a few dollars cheaper. And if you don't learn how to sell yourself value, I'm going to use that next time in the house. Stranger danger.
It goes right along with the morning after call. You know,
Yeah.
you get that call the next morning. It's kind of like the walk of shame. I'm having second thoughts. The Lord told me not to get this insurance.
Yeah.
I'm like, but he said I sent you yesterday. I'm so confused.
Yeah. I don't know. Nick, what are your thoughts on this?
I mean, it's a good idea to make sure that you set yourself up so that you are harder to be replaced. One of the things that I was taught to do that I like to do is write thank you cards to my clients after I get back. And I don't use something like send out cards. You can use something like send out cards for other things, keeping in touch with people throughout the year and whatnot. But I like a real handwritten thank you card to go to the clients, just because, especially with the final expense clientele, these are people that are not used to being appreciated. These are people that are not used to being told thank you. And it means a lot. And the thank you card does a lot of stuff like that. The other thing that I do, and I started doing it mostly because laws in Pennsylvania are weird. But one of my companies forces me to is I deliver policies. And not a lot of FE people deliver policies. And I understand why a lot of FE people don't deliver policies. It's a high volume business, so if you're writing 10 policies a week, that's a lot of policies and a lot of time that you got to spend to go back out to see a person a second time to go give them their policy. But I think there's value there. I get a lot of referrals from going to deliver policies. People whose policies that I've delivered very rarely replace. Do I hear anybody replace? I don't get replaced very often anyway. But I mean, they tend to keep their policies better. You have that one more point of contact of I'm here to service you. You get a chance to say, hey, listen, if you have a problem, if you need your beneficiary changed, if you need to change your bank account, if you need to do whatever, call me. Don't call the company. I'll take care of that for you. That's what I'm here for. And you build that value in yourself as being the person that's going to help them out. I don't ask for referrals. Other than letting people know that if somebody refers them if they refer somebody to me, I'll send them a $20 gift certificate to a restaurant or a grocery store or something, something not redeemable for cash. But I don't ask for referrals otherwise, but I get referrals all the time because I do those types of things. I send the thank you cards. I go back and I deliver the policies. If somebody needs to make a change on their policy, I go out and I see them. I spend time in my week to do that. I set aside time in my week. It's part of the reason why I try to only spend 2 days in the field selling, is so I can do some of this other stuff. Some of it's stuff that's for me. Sometimes, my mentor, Travis Tubbs, likes to say to people, are you doing something because it's for you, or are you doing something because it's actually good for the sale, because it's actually good for your business? Some of this stuff is probably for me. Some of it's because it makes me feel good. But I think there's value there too. It's a hard enough business. You spend a lot of time in your car. You spend a lot of time by yourself. You spend a lot of time in homes that people don't want to be in. Doing the things that make you feel good about this job are important for your own mental well-being, as well as everything else.
I think I'm going to take the side of what you're selling is absolutely not competitive for a moment and say price doesn't matter, but if you know you're not price competitive, price still doesn't matter unless it matters to you. People still need insurance. There are still people that you can offer good coverage to. There's still people in waiting periods that don't know it. There's still people in term life and bad ULs that didn't know it, have accident-only insurance and don't know it. And if price is not super competitive with you, then build a better relationship, deliver the policy, visit every 3 months, call and say happy birthday, build a stronger relationship. What's interesting is some of the most uncompetitive policies I see out there are sold by debit agents that are in the home every month. And you could beat the price by $100 a month, and you're not going to keep the replacement.
So tough to replace.
Because next month, the debit agent's going to be back in the house, and Mr. John's going to be there to collect the money, and she sees him every month, and your policy's not going to last. I don't even make a point of fighting those policies anymore. I just find another way to help the person.
Yeah.
So if you know that you're not the cheapest and you're comfortable with that, that's totally fine. But find a better way to build value in you and your product and maintain the relationship, because I'm pretty good at this job, and I can't beat relationship in many cases.
No, and nobody really can. If you've got that solid relationship, it is very difficult. I know I ran into a person several years back who was such good friends with their agent that they actually went on vacations with their agent. This is a person that they met who sold them a life insurance policy, and it was a captive agent who worked for a single insurance company whose prices were crazy, ridiculously out of proportion high, and they just hit it off, and they became friends, and they talked, and they go to the Outer Banks once a year, every year, and spend a week together and just kind of hang out. That's not a normal situation, but you're not replacing that policy. You're not replacing a policy that's sold by somebody's brother or cousin or uncle either.
Unless it's permanent.
Well, but it's, yeah. You're not going to get in between somebody who's built a relationship. And I think you're right, Chris. I think if you're in a situation where you're not competitive and you're not competitive, you really have to go that extra mile to do those extra relationship building things. The other thing that you mentioned that struck a chord with me, though, is you have to believe in what you're recommending. If you are working for that company named after a dead president, and you know that you're not price competitive, but you genuinely believe in those extra benefits that company offers, you're going to do okay. You're going to get replaced a little bit, but you won't get replaced a ton because you believe and you're able to sell those extra benefits. And so much of it comes down to what you believe in and what you have faith in. This is a mental game in a lot of ways. And believing that something works, it's almost like it's a magic trick. Believing that it works transfers that belief to the people that you're talking to.
Sure. Yeah.
In this job, it is exactly what you say it is. And my leads are bad. Yep, because you said they're bad. My carrier's not competitive. Nobody buys. Yep, sure, that's actually true now. My carrier is price competitive. I believe in the product, and I'm going to help people with it. Yep, people are going to buy from you now. So price does matter, but what matters is what you believe as well.
Yeah, and I think at the end of the day, it's kind of a red herring question almost. Shame on us for clickbait. But it is. It's not. That's not the most important thing at the end of the day. Is what's going on in your own head is the most important thing, and how you think about how it works. And present it to other people. That's everything at the end of the day. There's people making money doing this job that are selling terrible products.
Yeah, I mean, for the first part of my career, I sold a very uncompetitive priced product in the market, but I did a high volume of business because I believed 1,000% that it was the best thing for my clients. And because I had that, they bought me every single time. They saw the value in Matthew. And those clients are still on the books. I couldn't go back to those and replace those if I wanted to, because I sold the devil out of those policies.
Not that you ever would go back and replace them, right?
Of course not. But I couldn't anyways. But that's our we're right at 30 minutes. I want to go ahead and wrap this one up, but we were kind of transitioning into a different topic, and maybe it's something we can do on a different day. Let us know what you think in the comments. How do you build value in a house? I think that might be a really good topic that we need to talk about, but that's a different one for a different day. Chris, if you want to hit us with your saying before we get out of here.
I had one more point I really wanted to cover when it comes to price.
Yeah, come on.
One more. A lot of times we take the easy route on moderately complicated people and just, this is guaranteed issue. And I swear it's all over the internet.
Oh gosh, yeah.
This person has a stub toe and they're 52 and they take lisinopril. Do I have an option besides guaranteed issue? Oh my God, you do. Stop. Please tell me you have an upline or a mentor or a manager that will work through underwriting with you. Here's an example. Sometimes price doesn't matter because you can offer a return of premium product from a bigger carrier that pays you better and bills properly. Ironically, some of these guaranteed issue companies have the worst persistency because I don't think they care. Some of these companies will pay you 40, 45, 50% to write GI, and you can write full comp and write a return of premium or graded product. If it's within a couple dollars, if it means keeping you in business and it's keeping your business with a core company, keep in mind they've got other products. If the person qualifies for a true graded benefit where they're getting 25 or 30 or some percentage of the death benefit prior to year 2, that's a better benefit regardless of price. If it's a $20 difference, I would rather them die with 30% of the $10,000 than a return of premium. So keep in mind you've got other options, and sometimes those options are better for you and for the client, and price comes totally secondary. And especially in replacements, pardon the amount of coffee I've had, if the person has $50,000 with Globe Life for $15 a month, you're not beating it on price. The amount of coverage is a unicorn. You're not going to try and beat it on price. This is a value proposition.
Yeah.
Go ahead.
No. You're absolutely right. You gotta get in there. If what you're selling is final expense whole life, and I know we call ourselves the insurance panel, but it's really a final expense talk every week. If you're watching this and you're like, oh, I can't wait for them to start talking about P&C, it's never coming.
Nope.
So it's always going to be final expense. Sorry, guys. But if you're going out there and you're selling a final expense policy and you run into somebody with a terrible term product that's going to go up to crazy heights, and term doesn't do what final expense does. Term is bad for final expense. You don't want something that is going to end before you do. You've got to, price in that case doesn't matter, because you got to sell the idea that they've got the wrong product, and you got to get them into the right product first. And then someday we can talk about not sending things to GI that don't belong in GI, because holy cow.
I'm actually not done preaching. Price doesn't matter if the policy that was written is not written correctly. If you get someone who bought a policy 6 months ago and it's completely fabricated, and you did a good job of reviewing the policy before you go forward through your discovery, and she doesn't get the bill chart, she's smoking, it's a non-smoker, it's got COPD, and it's checked no, you're not going to beat it in price, but it's not going to pay if they die.
Yeah.
So price matters sometimes.
Don't clean sheet applications. If you're watching this video and you're clean sheeting applications, you're parting people down as non-smokers when they smoke. You're skipping over the fact that they've got an oxygen tank in the corner of the room. Don't Don't do that.
We're gonna catch you in Pennsylvania.
Somebody's gonna track you down. You know, if you're in Pennsylvania, you're getting reported to the Department of Insurance. If I find you, stay out of Eastern Pennsylvania at least.
Don't cross-sell life during your MAPD appointment. We're gonna see that too.
Yeah, don't do these things. Be ethical, please. Please, 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 please be ethical. Okay.
Yeah, that's another disclosure that we need to start saying is be ethical. Please, 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 please.
Oh yeah, that's the basis of all these talks about replacements, about price, about IMOs. It is do what's right, and if you can't sleep well on it that night, whatever you did was probably wrong.
Yeah, I mean, and there's people who will tell you that you shouldn't ever replace a policy that's over 2 years old. I disagree. My cat disagrees. But you got to do what's right for you in that situation. If you don't believe it, it's not true. It's it's so much about what's between your ears. I'll go out and I'll preach and say that the best program that I ever had was when I was with Combined. W. Clement Stone wrote The Success Through a Positive Mental Attitude, which is based off Napoleon Hill's Think and Grow Rich. And it sounds like woo-woo, new age, like The Secret type of stuff, but it's not. It's just about mindset. Mindset is everything.
That's right. Mindset is everything. Chris, hit us with the disclosure, my friend.
Yeah, nothing we said is a representation of any organization we prior worked at, currently work at, and it's just simply 3 guys from 3 different organizations sharing their thoughts on a particular topic. Like, comment, and subscribe, because we'll have something new for you every week.
Guys, y'all are awesome. Please subscribe. We're going to do some small giveaway for the 100 subscribers. We need you. We need 1,000 quicker than we need 100, but that's a different story for a different day. Chris, Nick, I appreciate both of you guys getting on. Both of y'all just spew knowledge every time that you get on the mic. I'm just honored to be doing videos with you guys. You guys are awesome.
Have a good one, guys.
All right, guys.